Hey, good morning, everybody. Trendy John here from Simpler Trading. Let's go ahead and get started with this week's broad market analysis. If you guys would, please just give me a like there. Comment if you know what Melissa and I are doing for you is helping you out in your trading. We really appreciate it. We appreciate the support. And as always, I can't wait to trade with you guys. Did you guys know it's Labor Day weekend? I mean, it's Sunday, the 31st, and we also haven't even completed this monthly candle, which is kind of a big deal for this week. What I'm going to do is I'm actually going to bring the room down here. And instead of going over all the charts, I'm going to make this really fast and easy for you. My overall sentiment for this week is going to be neutral. And there's a lot of reasons for it. And I will show you those reasons as we walk through this. So again, guys, here in the room under broad market analysis, you can watch this on my YouTube channel here. Just use this link. This week's major U.S. economic reports and Fed speakers, the reason why these are important is because these events can cause volatility in the market. Now, please understand, I do not have the POTUS schedule on here. He could speak at any time and cause some volatility, so please be aware of that as well. Monday, Labor Day holiday. Hope you guys are having an amazing Labor Day weekend. Tuesday, we have PMI and then some construction spending. Wednesday, a few of our Fed heads speaking. We have some job openings, the Fed beige book, some auto sales. Thursday, ADP employment, initial jobless claims, a PMI. And then coming in over here, we have towards the end of Thursday, we have some more Fed speakers. And then Friday, we have the unemployment rate reports and the hourly wages, and then hourly wages year over year. As I said last week, it's really turning into that kind of slowdown period, and we can see that in the market. A lot of traders, and a lot of people across the entire world are getting ready for school, and that's showing. And as vacations slow down, people are getting back into their groove, and I'm just seeing a lot of chop, slop, a little bit of slowdown in the market, if you will. Notice that on here on eWhispers, we're seeing that our earnings are kind of coming to an end as well before we ramp back up for banks a little bit later. But, going into this week, there's a couple names on here that maybe I'm interested in. It'd be Dollar Tree, CRM, Thursday, Lululemon, Broadcom. But other than that, maybe Path. Not much going on here. So again, really slow, pretty choppy filling. That brings us to our bigger picture, which is the SPY. And I like to use the quarterly candles. These help keep me on the right side of the portfolio. When I say that, I'm net long this year, basically buying dips. I'm buying some hedges here and there. I do have a hedge on right now in the SPY. As far as my notes go for this week, and for the quarterly, it's been a great quarter. And it's kind of funny when I look back, a lot of traders were saying that August and September would be, just bad month. It hasn't been spectacular, but the ES futures and the SPY have looked amazing. A new high was established last week as we were projecting, and by the end of the week, the candle formed into a weekly inside candle. The quarterly candle is still bullish, but extended from the 9 EMA, so that's a big disclaimer. Just be aware of that. Doesn't mean we have to come back. One other note that I want you guys to take is that the 9 EMA is confluent with the what we call golden pocket, and the golden pocket is the 50 and 618 combined. Your bullish channel is 610 by 585, and as long as prices are staying up there, I still continue to be bullish on the portfolio side. The weekly, an inside week was formed. Note that 637.18 continues to be an over-under for the formation that was created 2 weeks ago. So basically what I'm saying here is the 637.18 level that started the inside and up formation is your over-under for the entire week. As much as I want to be bullish, I'm torn here because the 9 EMA on the weekly is confluent with the inside and up, but 2 weeks ago we already tested the zone. Okay? Right there. The big question for me, do we have to test the 9 EMA? I mean, I don't know, but one thing I do know is that we always do, but timing is the variable. I feel like I will get my answer soon, and so will you, but I'm not here to guess whether or not that happens this week or next week. I'm just aware that it could happen. Notice I still have $635 puts, and these expire on the 19th of September, and they are aligned with this area of confluence. These are going for about $500, and you guys can see the position size on it. It's pretty small, but it still has 19 days until expiration. On the QQQ, the bigger picture, not much has happened here for 3 weeks. Not a great week for the Qs, but it's not terrible. The quarter continues to be a continuation candle with slightly a topping wick. That signals to me that there's some warning on lower time frames. The fibs and levels do not change as of now. Note that the 9 EMA is confluent with the golden pocket, just like the SPY was. So again, this is an area that I really like down here. Doesn't mean we'll get there. And until then, the bullish channel remains 540 to 514. And for me, my overall sentiment, again, is neutral, buying dips only at levels for me that I deem necessary as a support. As we move down, we then get into the weekly. You'll notice that the weekly looks different than the SPY. So if we go back, we're going to go into the weekly, and the weekly is really important for the SPY because, and I want to show you guys right here, what I want you to do is I want you to draw a line on top of the body of the previous week. And then I want you to draw a line at the bottom of the candle. And basically, these are your over-unders. If we're over that top line, I'm bullish. If we're under that bottom line, I'm sideways to down looking for a bullish play, but further down and could get short. So inside week, just you're looking for, do we end up going inside and up, or do we end up and go inside and down? Okay, again, I'm not here to say which one is going to happen. Price is king. It will tell me which way is happening. So when we move that into the QQQ, you'll see here that things look a little bit different. We have 2 weeks down. We didn't have an inside week. And a lot of times when we're getting to 2 to 3, the number 2 to 3, 2 to 3 days down, 2 to 3 weeks down, 2 to 3 months down, I'm looking for some sort of possible relief bounce. This top and wick tells me that bears have really put in a wall here, and it's sideways to down until proven otherwise. Doesn't mean we don't get pops and we can't play those pops. But far as continuation goes in the portfolio, I am definitely cautious, and I'm really not super bullish unless we were to dig deeper into a level where I want to add into long-term trades. Again, QQQ, my overall sentiment here is neutral as well. I would say on the bearish side, but 2 weeks down, again, possible relief bounce. We'll wait for price to tell us. Moving on down, we have the dollar. The dollar is important this week, but the same level continues to be the same, guys. If we get above 98.20, there's caution for me. Look for the market to continue down. If for some reason we start to break down, okay, underneath, let's pull, I'm going to get this out of the way real quick. Let's get into the dollar here. So it's going to be $ DXY. And we're going to pick this bottom one here. I'm going to go into the weekly. So 98.20, caution in the market. And if we start to break down below 97.5, then I'm looking for the market to continue to the upside. Okay. On the TNX or the 10-year treasury, there's not a whole lot to talk about there. It looks the same. It hasn't done much. It is rolling over a little bit to the downside. And because of that, you could see the TNX roll over a little bit more. We've just basically been trading between both zones here. It's the same charts that I've been sharing with you for many, many months now. So not a big change there. The skew is 152. I do believe this is something to talk about. The skew, basically all you need to know is when the skew's up here, we're basically greedy as hell. And your hedge funds are looking to really protect themselves, and there's risk off in this area. When prices to the downside, basically everyone's on puts, there's a lot of fear. And this is where I actually start to look for risk on. You'll notice that over the last several weeks that the skew, surprisingly, is not trading at extreme levels, but just kind of teetering on messing with your freaking emotions. And because of that, you start to speculate and things aren't really playing out as good as you want them to happen because, again, you're not at the extreme levels and there's not a lot of volatility. Matter of fact, the SPX has been ranging around 11 to 15% and really 11 to 14% on implied vol, which just says, hey, things are pretty boring right now until they're not. All right. So I like the levels up here and I like the levels down here far as trading is concerned. Okay. As we move down, this really, the fear and greed index tells me, again, it's the same. right? So we have not been over here. We have not been over here in a couple weeks. We're just kind of teetering, and this really like sets up for a boring market, and we just need to be aware of that. But boring doesn't mean that you have to be boring. There's other things to take action on, like selling credit, selling iron flies like the bot does. We can do iron condors, a lot of different things we can do. Or if you're taking longs or shorts, you just know that you don't get overly biased on something and you take what the market gives you. So a lot of times what you'll see that I'm trying to do in this market is go lower allocation, but take profits a little bit faster. Okay. So once again, guys, pretty neutral across the board. Let's get into the futures. Instead of showing you this, I'm going to get you into the charts here. And let's go ahead and go to ES. And on the weekly, this is pretty much the same thing that I just went over on the SPY. We have over unders. I used the body of the previous week, so 2 weeks ago. I'm bullish more above 64.85, and I'm cautious below 64. Let's just round 64.66. We have extension targets. We have the high up here, and then we have a 9 EMA. Honestly, I would just draw a line from the high here all the way into the 9 EMA and understand that this is day trading type stuff. So I'm coming in here and I'm just doing the best I can on SPX, futures, and so forth, trying to trade the levels that we present in the morning. Okay. It's not until we get further down here that I get more bullish, and it's not until we create bases above the highs that I start to get bullish. It's just a playing field. Okay. Moving on to the daily, we always have these trigger longs, resistance, and usually trigger shorts. But again, I'm not overly biased to be short, so I don't have a trigger short on there. But the resistance can serve as a short, and that resistance comes in at the upper weekly edge at 65.11. And then I have trigger longs down here at the lower weekly edge, 64.44, 63.92. And again, things have to line up on my lower time frames that we teach you in the room in order for me to take these trades. So please, if you want, you can put these levels on there. But if you want to understand how we trade them, then come into the room. Let's go ahead and move on to the 4 hour. This is a really nice, clean picture. One thing that I want to really stress here is that the distance between this edge and this edge are super tight. Once again, telling me it's going to be choppy until it's not. The second thing is the candle itself closed more in the middle, which tells me, you're at speculation. We're not here, we're not there. So really, just let price kind of do its thing until it gets to a level, and then you take action at the level. Try not to speculate and go, hey, I think we're going here, or we think we're going down here. Let the price give you clues on that. But basically, we stalled in the middle here. My favorite part about these charts is the ES and the Nasdaq, the SPY, the QQQs, is your bigger imbalances are down here. This is more of my favorite area to get long than it would be down here, but we definitely could get a nice relief bounce here and just kind of go sideways this week. Okay. Let's go into the NASDAQ. And same thing, we're going to start over here with the weekly. And if you remember on the SPY and QQQ, they look different, right? Well, they're going to look different here as well. So the ES looks a little bit better. NASDAQ has 2 weeks down. And better really is perspective. Maybe it's better because we've gone down 2 weeks that the NASDAQ could possibly flush and then start to move back up. I'm not sure yet. Again, we'll wait for that. But we are 2 weeks down. We have a high. We have a green zone that's already, you could see we had the 9 EMA. So really the same thing here. We just draw a box, come down into here. This is more of an intraday playing field. We come in, trade the best we can. But as far as the portfolio is concerned, it's just really at a neutral stance at the moment, unless we were to dig deeper underneath this zone and unless we were to create a base above that high. Overall sentiment, again, neutral. Let's go over here into the NASDAQ daily. Same thing, trigger longs, resistance. You guys can see where those levels are. You can pause this, put these on your chart, but understand that I'm not just going to blindly trade these. We could talk about them in the room. On the 4 hour, same thing here. But the big thing that stands out to me is that we actually closed towards the lower weekly edge, saying that, hey, we could see a relief bounce going into Tuesday when we open up. I believe futures do trade tonight. And that would be at 5 o'clock, or about 5 hours from now. You'll also notice that our edges are aligned with some nice structure over here, so they should work pretty well. But I do have to point out that I like this level better. Doesn't mean we'll get there this week, but if we do, obviously we teach how we approach those levels once price gets there. Okay, so that is the ES and the NASDAQ futures, the SPY, the QQQ, the dollar, the SKU, all that good stuff. Now let's lead it and end with the Bitcoin futures because, I feel a sense of bearishness here. at least for outside, you know, uh, people chatting and so forth. And there is reason to be because the quarterly really changed things up a lot. What looked like a beautiful continuation candle right on the brink of being the end of the quarter has turned into this big topping wick. And it's really right on the edge of being an inside quarterly, which is a huge difference on what it looked like just a couple weeks ago. The topping wicks tell me, hey, be careful. There are signs on smaller time frames. Overall, though, I still like my projection, but we are dealing with a high and we're dealing with this 9 EMA, and the same thing is looking really choppy here. I gave you some levels last week, and I'll continue to use those levels. I'm not really bullish, unless we are above. And this is kind of weird when I say this. I'm bullish at buying the dip. So even though I say it's bearish below 97, I actually start getting bullish down there because we're getting close to this zone. Okay. Uh, Above 123,000, or sorry, above 123,900, I start to feel bullish again as well. So my overall sentiment, guys, is bullish. It's just that I'm bullish further down, and I'm bullish if, again, we create the base. So overall, you're seeing a narrative here, or how I'm looking at the market is that it's if this, then that. And where we are right now is just telling me, hey, guys, let's just, watch price, understand we're in a choppy situation. Don't over allocate, don't overtrade, just do the best we can. Take what the market's going to give us. But far as like big adjustments for me, I'm just not there yet, meaning I'm not super bearish, I'm not super bullish. I'm just overall concentrating on the bigger time frames. We do have an intraday strategy that I absolutely love to use, and we use the PMZ every single day. And when we come over and we look at, I'll give you an example, the ES futures, we can just go back to Friday and see what we have on here. Give me 1 second. Put this on a 5-minute. And this is the PMZ strategy. So once we broke down here, I believe, yeah, so I went short here on some SPX. This did really well. It made some money to the downside, and that kind of helped out. And basically, it's really easy. This PMZ is one of our most popular indicators. You're long above it or you're short below it. If you're familiar with the orb strategy, this is the only strategy I can kind of think of where if you are like relate to the orb strategy, this kind of helps, but to me, it's a lot better. So come and check it out if you haven't. I've been using it for almost 10 years now. I really, really love it, and so do our members. And I would love for you to come out and see what that looks like from an intraday status. That way, when you watch this broad market analysis, you understand the big picture, but don't forget, like we're trading intraday. All right. So anyways, I really appreciate you guys. Have a beautiful Labor Day weekend. Don't forget to hit that like button. We'll see you an hour and a half before the market opens on Tuesday morning. Have an amazing time.